All right, so we're gonna do the weekly close review. So I think I'm like, what's that? One, two, three, four, five. I went from seventh to fifth out of 400, so that's cool. Um, 6.2 alpha. Percentage of alpha is 3.4, so I think the alpha in the ranking have something to do with like percent of winning positions and the movement. I think it's these other ones before me. They don't have as much drawdown as me, but yeah, like most of my stuff I bought at the first month of February, so the cost basis is still relatively high. Uh, but it's still doing well. Like, um, yeah, the stake mod. So the stake mod also has a factor in the formula. But yeah, I'm in the running. I think I'm tied. I'm tied for. So as you can see, but I'm primary in the tie because of my alpha. It's just way higher. But yeah, Mark, he is a big contender. There was someone else. Yeah, Mark's always in the top five. And then for some reason, Anton, he's supposed to be pretty good. He's dropped a lot. I think he's just got too many long positions. So, Alpha Algo, monthly return. This is kind of funny because, for the longest time, I think it's over a month, I haven't been able to reach these like superstar boards. But yeah, I'm doing pretty good. Um, yeah, I like to see that I'm the top analyst of the Alpha Algo on the Z score and the monthly metrics. I'm the top. But it doesn't mean anything if you don't win first place, right? Just for ego, you gotta win, right? So that's the Covey portfolio, and I'm basically I have like there's almost no stocks. The only stock that's in there is Chevron, and I'm short on it. And then most of them are ETFs. There's some crypto coins in there that I'm short, but we'll see how long that lasts because crypto's kind of weird right now. So this is the Apex, the futures. So for the most part, we just been going sideways. We would have some up days, but for the most part, we're just going sideways. The market hasn't really been going a whole lot of places, to be honest. Like it's literally just been going sideways. So for this week, it was really difficult. Uh, kind of just show it to you right now. This week's been really difficult, and let me see if I can demonstrate just how difficult it was. This is not what I want to watch. This one. So looking at the this is the weekly range we had is pretty wide, and I would say this is it right here. It's just so wild. I just know that this last week was terrible. It was just so wild. So many wicks. John Wick. John Wick's in there. He's getting frustrated. So, but yeah, it was really difficult. That's all I can say. And we're pretty much like in no man's land. And I think that's kind of what makes it difficult is that there is just no direction. It's just literally gone sideways for more than 1 month. January, February, it's just literally gone sideways since the beginning of 2023. Like, I don't know. Like, to me, this is sideways. we've just been going sideways for the first 3 months of the year. Now, like, what's gonna happen from here? I don't know. You just got to do it level to level. Right now, we went into the bear trap and we came back up off of support on the week, and we closed the week above this resistance, now support. So like, I don't know what to make of it a whole lot. This could just end up being some kind of crazy breakout, maybe if we hold. So that's the question. What's the weekly close, this coming weekly close, going to be like? And what's this monthly close going to be like? Because that's going to reveal a lot as far as, like, are we going down or are we breaking out to the upside? It's just going to take some time. I have no idea, to be honest. It looks bearish to me. Institutional bias, it's pretty much neutral. We want this thing to go down, because then we could get those huge, like, 3% bars. That's kind of what I'm expecting. So then going into, we saw the sp500. Let's go ahead and just wrap it up here. Yeah, this is like an example of just the tight ranging consolidation. Like, it's just getting tighter and tighter the farther we go into March. But yeah, I don't know. The farther we get into March, I don't know how many more weeks going into April this can go sideways. Like, I mean, we've been going sideways for a while. So it looks like we're running out of space. But unless it breaks out, we're just going to go sideways. And if it's able to hold, then we could see some kind of bullish run until June. And that's when I'm expecting to roll over. But sp500, this is the resistance that we have to break, the 12-hour bearish order block. So roughly on the 12-hour order block basis, we're bearish. So this is kind of how I see the market right now. Even though we had like a bullish weekly close and a bullish daily close, I still see it like this. We're still bearish, and we could still break down. And it could be this week. And I still believe that. 4-hour, we don't see a whole lot of significance here. The biggest thing is any short-term breaks in market structure due to this 12-hour bearish order block. Now, oil's kind of weird because we're kind of in this possible breakdown. So this is kind of something where it would work more towards a bearish tone, but we just don't know. It looks like it's a breaker to the upside. But the thing is, it had a really strong close to the downside, and this could be gone. And we just have to sweep these lows, because this is the deviation, left shoulder, right shoulder. So it really depends on how this plays out for oil, and whatever plays out for oil will affect the S&P 500. And most likely it's going to look very similar. This is the deviation on left shoulder and then right shoulder. It's just we got to wait to see how it plays out. Now, things that would be noteworthy. So we did have a breaker to the upside here, and it totally blew through it. Now we're bearish on the dollar. So if we wanted to see a reversal, which we could this week, we would need to see it close above. But we see no signs of that right now. It's just in resistance. So right now we're just facing kind of bullish. So this is supposed to be a break to the upside, but we totally blew through it, closing down here at the lows. So it's just really odd. Does it reset? And that's kind of just the big question. If we were to kind of modulate it from aggressive to non-aggressive, Let's see what it would do. It'd still be the same. And we could try that for the dollar. I don't think it's going to change a whole lot. Yeah, it didn't change. So I think our assessments so far on a high time frame are accurate. We're expecting some upward volatility, uh, flight to safety to the yen. That's kind of why we're looking at this faster time frame of the 12 hour. So this is saying that we broke down here, but yet it's looks like it's holding. We might get a spike down here to retest this naked breaker, but I don't know. Maybe it just stays naked and this holds and we go up. So it's a lot of uncertainty. So that's what I would say is just it's uncertain. It's unknowable what's coming, but it's something to just be prepared for because it's appropriate. Like the VIX has broken out on the weekly. It's the yen is broken out on the weekly retest resumption, and the price has to move a lot to be able to do that and retest resumption. And so the time for the most part is baked in, like it's almost all put in its time. Maybe there could be more consolidation on the VIX, but to be honest, like I don't know. We had a really strong close here. It's just a matter of time for us to, uh, resume back up out of this break right here. We broke close of the week right here above this. Now we just need to reclaim, and that's what it's trying to do. It's trying to reclaim up here, and in some way this is a reclaim. Left shoulder deviation, right shoulder. I use the wick here, and we could use this thing, but yeah, it looks like a bullish kind of pattern. Even though it had a bearish break, it reclaimed. So that's kind of just what makes me think that I need to be prepared this week for some kind of possible bearish event. When we look at the calendar, we got Thursday or Wednesday GDP, and then unemployment's in there. So there's possibility of it just any kind of upset of news or bad positioning. So we got to take it weekly close to monthly close, and within this next weekly close, we got GDP and unemployment, which are two big news events that are holding the market up. And if if there's a surprise or it's negative and then we also got the PCE, which is related to inflation. So all three of those could be bad. Who knows? If unemployment's bad, or lower or higher, then I think that's the only thing that's holding it up, to be honest. But if I were to review my forecasts for either PCE or unemployment, they all peak in June. But we are in the upward direction in terms of the forecast. So, but what's weird about fundamentals is you just don't know at what time is the catalyst and how the market, where the assets are going to go. When the market digests that, you just don't know. And right now with liquidity, scarce collateral, liquidity crisis, the best thing to do is just to be neutral and be ready to be able to take on that volatility. And that's what we see. We see increase of probability for more volatility. And that's what I'm betting on. I mean, that's what the Covey portfolio is. That's why I'm fifth place out of 400. It's my number one position is the UVXY, which is 1.5 times the VIX. So and I'm shorting beta, which is a lot of crypto alts. So that's kind of just like the summary. If we were to take a look at the math cycle on the forecast, you know, the biggest thing I'm looking at is this trading spectrum going into the monthly close. If we see just a rollover, some kind of further breakdown of market structure, that's kind of what we're looking for. Further momentum to the downside. And in some way, we do see that kind of roll over on the decennial here going into the next week. You know, we got 27, 28. So once we hit that 27, 28, we're kind of rolling over on the trading spectrum, we're rolling over on the decennial. Now we just need to check to see if there's an update in the Q spectrum to see if it agrees with us. But that's the only thing that's not totally agreeing with us and just kind of prolonging this dip. And just also, it changed its character. But the trading spectrum, based upon walk forward analysis, hasn't changed. And for the most part, the decennial hasn't changed a whole lot. It's just kind of, it moves maybe where it thinks the peak would be. But this is kind of just, you know, why we have, there are no certainties. There's only probabilities. We play it week to week, month to, you know, monthly close to monthly close, and we got one specific point we're really interested in, and that's this weekly close or how this week is going to behave in the market structure, and we're just going to pay attention. And then if it's a you know a none you know a nothing burger, then we got another period that we'll be interested in, which is around June, around sometime around June. We're interested in to see kind of what's baking in the cake here. Is it something that we should be concerned about here in June? But I would like to see the you know, we had it up earlier. The Williams Money Flow Index turn bearish. You know, I would like to see the sp500 on the Williams Money Flow Index turn bearish. That would be such a huge confirmation for me. It could go that way. You know, more market structure breaks or failure of breakouts. I don't know, or loss of or the euro uh, struggling. So right now, if we were to look at in a like a smaller time frame, we're just getting nested breakers. So oil on the 4 hour for WTI, it's got nested breakers. So it's just a lot of chop. It means there's going to be a lot of sideways motion and consolidation. So we're just in a consolidation period. But here on yen and VIX, so we did get a nested breaker here. There was a breaker here, and we broke out here, retest. We just need to see resumption. So the VIX has got a nested breaker. The Euro's got a nested breaker. The dollar almost got a nested breaker. I mean, it's kind of too late, but it's not like a typical nested breaker because it's already retested. Here, the break made the retest, and then now the retest resumption retested the one that broke down recently. So that's kind of what I think is a nested breaker. And then I guess you could say the sp500 it's got the same thing right here. Breakout, retest, resumption, and then break, retest, but then we're coming back into it. So I don't know. It's really confusing. It explains why I've been going sideways in the futures thing. I'm just the goal is to not lose money and make it to the point where we're getting 3% down days. If we get that, that's kind of just the expectation with the amount of news and volatility. But I'm at the ready. My goal is just to make it so that these accounts survive to where we get these big runners. And I've yet to see it. We're waiting weekly close to weekly close, monthly close to monthly close. So I mean that is the alpha. That we level to level, weekly close to weekly close, monthly close to monthly close, and we just see how does the data express itself, both from like the math science side with this, which is that forecast, and the discretionary side. You could I consider these market structure breaks as more of like the science side versus discretionary, but some others might see it more of discretionary. But if we were to take a look at gold, gold's hit the upper end of the range, so we got to figure out what's the next move. We could come back and fill these gaps, and this end up being like left shoulder deviation, right shoulder, but it's still got time. We gotta wait until the market structure actually breaks. Right now, it's uncertain, but it should be alarming to see like risk-off currencies like gold or the yen or the dollar doing decent or doing well, or at least two of the three. The dollar going down, but it did look like it was trying to redeem right here on this 4 hour. So in the 12 hour, we're about to see if it's about to redeem itself, and also on the weekly. Right now, it's just uncertain what it's doing. This could be a bear flag, or this could be I don't know, a higher low and the beginning of an uptrend. It's just it's too difficult to figure out where things are going from here. So that's about it. And I'm going to go over kind of the plays that I did this week, the ones that were good that I want to replicate, and then I'm going to make some notes on what I did poorly on.